Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this video on the link between lying children and losing traders. And this is just a bit of a psychology lesson and some advice as well. So on where a lot of losing traders are going wrong, right? So the link between lying children and losing traders really comes from these four boxes, right? So you've got the right action, right result, and the wrong result. And as people, we tend to justify our actions by the result, right? And so if it was the right action, we should get the right result. And obviously, if you get the wrong result, then it was probably the wrong action. Obviously, life isn't as black and white as that. But when we're growing up, right, and when we're children, life is this black and white, right? So life is new, you're trying to figure out things, and being young, you have to figure out telling the truth, right, and telling lies, right? Now, telling the truth obviously doesn't always yield you the right results, which is the reason why children have problems and issues with lying. And obviously, as we grow up, we're taught by our parents, our from friends, family, teachers. There are certain in life, socially, you learn. But when you're getting to grips with telling the truth, right, it falls into these four boxes. So in a child's mind, right, the right action to do, or it might not even be in a child's mind, but the right action to do from an adult's point of view is to tell the truth, right? The wrong action is to lie. And I'm sure children have this concept of telling the truth and lying, but it's not always clear that doing the right thing will yield the right result. So, you ask, your child, did you take the biscuit out of the biscuit tin and I told you not to? Now, in their mind, right, they are thinking about, yes, daddy, yes, mummy, I took the biscuit out of the biscuit tin when you told me not to. But the right action is going to lead to, in their minds, the wrong result, not the right result, the wrong result, yeah, which is punishment, right? So, they're at a dilemma now, right? They're thinking, obviously, that if they tell a lie, if they tell mommy or daddy a lie, then they get the right result, which is, getting away with it and not being punished. So, obviously, they get to learn, they get to grips with this type of concept, right? But obviously, adults, as they grow up and as we grow up, there is still a lot of grey areas, right? And even you might think to yourself, well, who does that now? Things like procrastination, right? Procrastination, we know procrastinating, 99 times out of 100 is the wrong action, yet we still procrastinate and leave things to the last minute. And as long as whatever we're leaving to the last minute gets done before the last minute is over, it yields the right result. And then we keep procrastinating by leaving things to the to the last minute until we can't get it done in the last minute. And the wrong action always, right, just like telling the truth and telling lies, if you do the wrong action long enough, you might, get your instant gratification, by getting away with whatever it is that you're trying to get away with, whether it's lying, procrastinating, cheating, whatever it is. But eventually the wrong action is going to yield you the wrong results, just the same way that the right action in life, might not give you the right result, instant gratification straight away, but you'll get your delayed gratification straight away. So you can probably start to guess the correlation between losing traders who always take the wrong action, and they could potentially get the right result by taking the wrong action. But eventually it's going to come crashing down and burning. Now, a lot of traders don't know what the right and wrong action actually is, or maybe they're subconsciously aware of the right and wrong action, right? So this is my list of wrong actions and things that you should not be doing as a trader, right? And if you're doing any of these things, I suggest that you stop, have self-reflect, and identify your weaknesses and these things if you are doing these things, and stop doing the wrong action even though you may be getting the right results. So here it is: buying at highs, and you can basically say selling at lows, right? So everyone knows that you have to buy low and sell high. It's basically how money is made. We're searching for value. Now, one of the problems with emotional problems that traders have, right, is seeing a market go on without them, and they FOMO into trades, right? Fear of missing out, and they end up buying at the absolute high, right? It's just a response that we seem to have, this fear of missing out, right? It's always going to be the wrong thing to do, right? Waiting for, a pullback for some reason doesn't occur to traders who FOMO because they feel that they have to, they're going to be left behind, right? Not knowing that the market always pulls back. It always will, right? Markets do not go up forever. Yes, it may go off without you, right, for now, but there's other currency pairs to trade, there's other markets, there's time, there's the future, right? There's always going to be trading opportunities. And just, from my personal experience, when I first started trading, I FOMO'd into a lot of trades, right? I would, the market would be going up. Then, I'd say, oh, okay, I've got to buy now. And then, what happened was it would stop me out, retrace back. Then I think, oh, yeah. It's going down now. I'm chasing this trend. And then, this was really the retracement, right? Back to, potentially fair value or below fair value, right? And then the market would carry on going higher, right? So just never FOMO into any type of trades. Don't buy at highs, right? Also, if you are a breakout trader, right, then you are pretty much buying, right, at highs, right? So let's say, for example, waiting for a breakout, right? You're buying at highs or buying at lows, right? So prices either have to break out to downside or break out to the upside. Now there is obviously there's a caveat to this, right? Is what I would say is, if you are buying at the highs, right, and you do not know why you are buying at this level, why prices could potentially go higher, right, from a value perspective, then you are doing the wrong thing, right? You're taking the wrong action. If you're just basically buying at the high simply because you got a candle close around this level, right, then you are basically doing the wrong thing, right? Yes, you may get some instant gratification and prices may break out, right? But if you don't know why, from a fundamental, right, or sentiment reason why prices are breaking out, you are doing the wrong thing. You are buying at highs the same way you are selling at lows, right? So and you will if you go online, there's not too many breakout type strategies that are people teach that are very successful. Otherwise everyone would be trading breakouts, right? There's such thing as I suppose the narrative is false breakouts, which really isn't false breakouts, and I'm going to explain that in another video. Your money pretty much is at risk. It's a zero-sum game, right? And your money's there to be taken, and the first people who normally have their money taken are people who buy at highs and sell at lows, which are breakout traders, right? So if you don't understand why this is undervalued at the time of the breakout, then you are doing the wrong action and your account will continually suffer, right? Oh, and if you if you agree with me, if you disagree with me, definitely comment in the section in the comment section below. I'd be happy to debate if you wish. So risking too much, right? Too much risk on a trade. I mean, this is an obvious one. But from a short-term perspective, you have traders who get drawn into the trading advertising of how I turned £1,000 into £100,000 in 10 days, right? And the only way that is possible is by risking way too much on a trade, right? You cannot do that risking 0.5% or even 1% on a trade. It's just not going to happen, right? So risking too much, right? You might double your account in the first 2 or 3 days. You may triple it, but eventually, right, you get a string of losses, which is normal in the trading world as we're dealing with probabilities and the law of large numbers. You will eventually blow up your account, right? And what too much risk does to you as well is it really damages your trading psychology. You'll tend to watch every tick of the market up and down because mentally that you've risked way too much, right, of your capital all on one. You're pretty much gambling, and it really messes up with your trading psychology, especially if you lose, right? Even if you win, it's just as bad as if you lose, because it teaches, like we were discussing, bad habits. You're doing the wrong thing, getting the right result, and eventually what's going to end up happening is going to come crashing down. Revenge trading is another one. Obviously, if you're re-entering a trade, it's fine. But if you're re-entering a trade based purely on emotion and not a setup because you hate losing, or the pain of taking a loss, maybe because you've risked too much, and even if you haven't risked too much, just revenge trading in general will damage your account, and it is the wrong action to take, right? You might get some instant results. You might necessarily prices may come down, you might get stopped out, prices may move up again. You may want to just re-enter purely on emotion, and then prices may stop you out again, right? If you keep doing that, you're just gonna blow up your account. It's always the wrong thing to do unless it's a part of your plan, technically and fundamentally and sentiment wise, to re-enter. In that case, it is not really revenge trading. It's just following your plan and you're not emotional about it, right? So inverse risk rewards. Now this has, for me, I think this is a wrong action. It comes under the wrong action box. So inverse risk reward strategies, you really have to win a lot more than you lose. So for example, if you're going for a 1-to-1 reward risk ratio, just to break even, right, you need a 50% win ratio, right? And if you're at an inverse risk reward, let's say for example you are a 0.5 to 1, meaning that for every £1 or $1 you risk, you're making 50 pence. Your break even rate, right, is a lot higher, right? Your win rate has to be a lot higher than 50%. Now in the short term, you could be racking up some pips here and there, but in the long term, it's only going to come crashing down, even with a high win rate. And this is simply because you cannot stop losing streaks, and it will take you a lot longer to recover those gains when you lose, maybe 4 or 5 in a row than it took to actually build that gain. And it's just gonna ruin your psyche again, trying to chase the wins. And when you do lose, you start making mistakes, you start getting emotional. It's harder to dig yourself out of that hole. And again, it all comes crashing down. Martingale, right? If you don't know what Martingale is, it's basically just doubling up every time you lose. So if you bet, £100 or $100 on a trade and you lose, right, then you're gonna risk £200 on the next trade to recover your loss. Now, it's maybe in the short term, again, it might work, but in the long term, it's just not going to work, right? It's just not going to happen. In fact, I think there was a UBS trader recently, well, I say recently, within the past 5 years or so, who was employing a martingale strategy, and he ended up losing billions, I think, for UBS Bank. In fact, let me see if I can find the article. So here is the article. The Martingale Gamble, a UBS rogue trader. Some gamblers double their bet after each loss and continues to do so until they eventually win or run out of money. So this guy was the rogue trader, and I think there was also I think there's a quote in here somewhere, if I remember correctly. Right, it takes deep pockets to continue to run such a system. Pockets the size of the UBS Bank, right? And that should tell you pretty much, if you got pockets the size of UBS Bank, then be my guest, try Martingale. But for the average trader, right, Martingale is just not going to work for you. So stay away from any system that encourages you to double up every time you lose. And finally, we have removing or not using a stop loss. If you are a trader that is moving your stop loss, right, or not using a stop loss, right, eventually you are on the road of ruin. Now, again, eventually price might come down to a certain level of demand, and then prices are here. You see some price action. See some price action. Put your stop loss below here, and then obviously prices are going against you. Now, for you to remove that stop, right, in the short term, prices may, right, this might just be a stop hunt, and then you got away with it. Brilliant, excellent. And then it reinforces bad habits, right? You do that again and you do that again. But what happens, right, when you move your stop loss a bit lower, or just remove your stop loss and prices, keep going down, right? All that work that you've, all those trades that you've taken, and you've tried to avoid, losses. Losses are inevitable, by the way. We are risk managers as traders, right? We're just managing risk. That's the reason why you never risk too much, right, on a trade. Too much risk, and if you risk too much on this trade, and prices go against you, and you're moving your stop loss, it literally is the road to disaster, right? So if you are doing this and you are getting short-term gains, and you're probably sitting there saying, what does Leon know? I do this, and it works sometimes, and I've been doing it all right. I don't even trade with a stop loss, right? I'm not offering financial advice, but what I would say is be very, very, very careful. Be very, in fact, I wouldn't even advise you to be careful. It's wrong of me to say. I have to say, just use a stop loss, right? These are what I would call the road to ruin. If you are doing any of these, please stop immediately, right? If you're risking too much, if you're buying at highs and selling at lows without understanding what is pushing price, and you're just doing technically, your technical analysis, yes, you might get, some instant gratification here and there, but eventually, it's going to be the road to ruin. Revenge trading, inverse risk reward, Martingale, moving, removing, or not using a stop loss. Please, do not do these anymore. So hope you enjoyed that. If you have any questions, just leave a comment in the section comment section below. Hope you enjoyed this. Just a bit of a refresher, and for those of you who are not doing this, congrats, brilliant. If you are doing this, please stop, and hope you have a great trading week and take care.